how crypto is just a macro asset. And it took a long time for people to believe that. They thought it's something different, it's something unique. It's a macro asset.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal breaks down stocks, bonds, and Bitcoin. What's working, what's next, and where to invest now. Let's dive in.
So you apply the same things that I've always used, which is liquidity, business cycle, all that stuff, plus a bit of technicals and sentiment. There's no voodoo here. It's pretty straightforward as an asset. It's just more volatile. So it's harder to deal with. But you were right. What I was seeing was like the liquidity indicators like Global M2 had stabilized and started going up. It leads Bitcoin. Bitcoin was following it almost perfectly. So I was starting to look for the bottom. Then I start looking at stuff like, okay, where's sentiment on NASDAQ? Because it's tech stock, same thing. It was in the gutter. Right. Sentiment was the worst I had seen since COVID. And that was across the board, across everything. Even hedge fund long short, everybody was max bearish. And I'm looking at liquidity. It's going up. I'm seeing the market getting fearful over a narrative. And I'm like, well, what is the likely outcome here? Are they going to have 150%, a trillion percent tariffs on China? No, they're going to reach something normal. So you've gone from peak headline fear to things could only be better from here. So for me, it was like a no-brainer of an opportunity, both in tech stocks and in crypto. And so going forwards now, normally speaking, this is the period, my framework is about, them rolling the debt and having to provide liquidity to do so. Mm-hmm. And so what we've got is a lot of forward-looking liquidity coming out of whether it's the weakness of the dollar, whether it's other countries using their balance sheets, a number of different mechanisms. And all of that to me is suggesting that the rest of this year is going to be very strong. And I was kind of thinking the NASDAQ was going to be a V-shaped recovery. And my God, it was a V-shaped recovery. And people are still underweight and short. It's like, it's a hell of a setup.
Bitcoin is once again at the center of the financial conversation after the U.S. lost its last perfect credit rating. Moody's downgraded the U.S. from A to A1, ending over a century of top-tier ratings across all major agencies. This move has rattled traditional markets and fueled the long-term bullish case for Bitcoin. As investors grow more concerned about rising U.S. debt and fiscal instability, BTC is increasingly seen as a safe haven alternative. While markets initially reacted with higher treasury yields and weaker equity futures, Bitcoin's price held steady near the $100,000 level. On-chain data suggests a bullish undercurrent as BTC supply on exchanges continues to drop. This means fewer coins are available for quick selling, signaling that holders are moving assets into long-term storage, a strong sign of confidence. Still, Bitcoin remains stuck in a consolidation phase. The Ichimoku cloud indicators are flat, showing no clear trend, though the price sits near support levels. Momentum is neutral, with no breakout confirmed yet. For a true move higher, BTC needs to climb past $105,755. The Moody's downgrade may not spark an immediate rally, but it adds weight to the argument that Bitcoin is becoming a serious hedge against government mismanagement and systemic risk. Long-term, this could be a major driver for BTC.
We overlaid the chart of 1997. The Asian crisis was a short, sharp shock versus now it's almost identical. The 4-month period leading up to it, 4 or 5 months leading up to it. And that was a V-shaped recovery as well, because everybody was caught off sides because they thought the world was going to end. Liquidity came into the system. It was via the Fed that time cutting rates and all the other central banks. And the market just went up in a straight line for the next 2 years.
Man, if it doesn't feel like you've got to price in some probability of that happening right now, I don't know anything, because there is some probability, like I was just talking with a few other professionals, And, there are a lot of people that are looking at this like, oh, this rally has gotten stupid. And then there are professionals that are looking at it like, no, this is day one of restocking U.S. equities, day one. And if it is, you got to kind of play that carefully. And in my book, on technicals, we're going blue sky now in the S&P, where it recovers all the major moving averages. And for me, the next target is the old high. So we'll see.
Yeah, it feels that way to me. And I think you're right. There is a risk here that we rerun 98, 99 or 99 because you've just taken all the tail risk. Let's assume that Saudi, the US, and Israel do a deal with Iran. That feels like it's going to happen. Let's say that there will be a ceasefire in Ukraine, and let's assume that the Chinese will come to the table, do something reasonable. Those three things happen. We've taken all of the left tail off the table. And people are going to be like, oh, but inflation's going to come back. And they're going to keep saying that for 18 months, which they kept saying as inflation's fall. So I think it is not a small probability that we have a really blow-off kind of next 9 months or so.
I agree. And people forget that the stock market doesn't mind the battle between inflation, stagflation, deflation, right? When it's a battle and we're somewhere in the middle and we're not redlined to one side, stock market looks at that and says, we're cool, right? As long as rates aren't flying higher off the handle, the stock market can go on business as usual. And that's where you see trends resume and individual trades develop.
I mean, the last Trump cycle in 2017, where the same thing, the market corrected in the beginning because everyone's fearing tariffs and the same narrative. The Fed were raising rates and doing the balance sheet runoff. And the market screamed higher all year because the Chinese were stimulating, the Europeans had to stimulate. So it feels like, even if the Fed don't do anything, I still think the Fed cut, but let's assume they don't. Well, that's not a prerequisite for the market to do anything. As you said, as long as rates aren't jacking higher, everything's fine.
Robert Kiyosaki isn't holding back. The Rich Dad Poor Dad author is doubling down on his Bitcoin belief, telling his followers to buy more, do not sell. He's now predicting that BTC could hit $250,000 by the end of this year. For Kiyosaki, the reasoning is simple. Central banks are crashing, bankruptcies are rising, and people are searching for something real, something scarce. And for him, that something is Bitcoin. On May 17, he took to social media to repeat what he's been saying all year. Gold, silver, and especially Bitcoin are the future. Kiyosaki says the traditional banking system is collapsing under its own weight, and he's urging people to protect themselves by getting into hard assets. He trusts Bitcoin, he says, because of its built-in scarcity. Only 21 million coins will ever exist. He's also warned that the economic collapse is already here, claiming that the crash has landed. From mass bankruptcies to job losses, and even the breakdown of entire U.S. states, Kiyosaki paints a bleak picture. But through it all, his advice remains steady. Ignore the panic, trust in Bitcoin's long-term strength, and prepare for a wild ride to $250,000. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.